DT House Ltd. (DTDT), the Cayman Islands Incorporated holding company established on June 3, 2024, as a rebranded evolution of Upper House Group founded in 2020, operates as a nimble boutique consultancy and service provider deeply embedded in the ESG, environmental, social, and governance ecosystem, AI-infused business transformation, and niche sustainable leisure travel facilitation, with its primary operational footprint in the innovation-driven Masdar city of Abu Dhabi, UAE, complemented by strategic extensions into Hong Kong's dynamic financial hub, employing a compact yet expert cadre of 8 to 10 professionals who collectively amass over 30 years of specialized acumen in sustainability, digital strategy, and narrative crafting, thereby branding itself innovatively as the outsourced Chief Narrative Officer, OC&O, to empower SMEs, publicly listed enterprises, and discerning investors navigating the complexities of green finance and regulatory compliance in regions like the UAE, where ESG mandates are accelerating amid global sustainability imperatives. At its core, DT House delivers a suite of tailored, technology-leveraged interventions encompassing comprehensive ESG education programs and internal self-assessment frameworks, meticulous identification of environmental risks and growth opportunities, pragmatic guidance on low-cost policy deployment to enhance market capitalization through sustainable investing channels, bespoke AI and automation roadmaps for operational overhauls, sophisticated narrative development synchronized with emergent macro trends such as climate resilience and ethical AI, advanced scenario modeling coupled with predictive analytics for foresight-driven decision-making, and a recurring subscription advisory model featuring a collaborative sandbox environment for rapid prototyping, audience optimization, and iterative refinement of ESG strategies. While its 2024 portfolio diversification into sustainable travel underscores the sale of curated tourism attraction tickets and experiential packages for inbound leisure visitors to the UAE, harnessing proprietary AI algorithms to slash operational expenditures by an asserted 90%, automate lead nurturing to yield 20,000 hyper-targeted prospects quarterly within the UAE market, and foster cross-sector synergies that amplify client ROI in an era of heightened stakeholder scrutiny on corporate responsibility. On the financial front, the trailing 12 months concluded September 30, 2024, illuminated a trajectory of robust expansion with $1.33 million in consolidated revenue, predominantly sourced from high-margin ESG consulting engagements, reflecting a marked year-over-year escalation, alongside a commendable $0.92 million net income that underscores 69% profitability margins, substantially eclipsing sector benchmarks for professional services firms, though granular quarterly snapshots reveal inherent fluctuations, such as approximately $650,102 in revenue against $248,166 in cost of goods sold and operational expenses, yielding $276,000 in net earnings for a recent period, juxtaposed against prior benchmarks of $1.59 million revenue and steadier cash flows, unencumbered by notable debt, all of which underpins an anticipated post-IPO enterprise valuation hovering at $68.1 million, predicated on the $4.50 midpoint pricing, engendering lofty forward-looking multiples including a 51x price-to-sales ratio and 74x price-to-earnings that, while emblematic of premium growth narratives in the ESG consultancy niche, simultaneously spotlight vulnerabilities tied to revenue over-reliance on a handful of marquee clients susceptible to defaults, litigation entanglements, or macroeconomic headwinds in green investment fervor. The IPO odyssey, commencing with the inaugural Form F-1 registration on March 3, 2025, and punctuated by iterative amendments on June 18, August 7, September 5, September 19, and the pivotal October 25, 2025 iteration, each refining disclosures, financials, and risk articulations, has culminated in an ambitiously upsized primary offering of 2 million ordinary shares, priced within the $4 to $5 spectrum, midpoint $4.50, poised to garner $8 million to $10 million in gross proceeds, net approximately $9 million post-underwriting discounts and commissions, to fuel multifaceted reinvestments including the geographic and capability amplification of UAE-centric operations, trans-regional scaling into Hong Kong and beyond, bolstering AI-centric technological infrastructure and IT architectures tailored for granular ESG data analytics and predictive modeling, opportunistic mergers and acquisitions within complementary sustainable services verticals to accelerate market penetration, amplified marketing campaigns to cultivate a broader client pipeline, sustained R&D investments in evolving travel and ESG product innovations, and flexible general corporate exigencies such as working capital buffers and talent acquisition, though the prospectus eschews precise allocative percentages in favor of strategic discretion. Orchestrated under the aegis of American Trust Investment Services as the sole book-running underwriter, the transaction incorporates a standard 15% greenshoe over-allotment provision for up to 300,000 supplementary shares, enforces a 180-day lockup covenant on insiders extending roughly to April 2026 to mitigate post-listing volatility, and anticipates quotation on the Nasdaq Capital Market under the ticker DTDT with 15 million ordinary shares outstanding upon consummation, absent greenshoe activation, all hinging on SEC effectiveness, Nasdaq conditional approval, and final pricing determinations that, as of November 2, 2025, maintain the filing in a protracted pending posture with no confirmed debut date amid lingering regulatory dialogues or market timing calibrations, potentially deferring the inaugural trading session beyond initial October 27 to 30 projections into mid-November or later, depending on macroeconomic cues like interest rate trajectories or IPO pipeline congestion. Leadership stewardship vests predominantly in Ms. Yurin Yin, the visionary founder, CEO, and preeminent shareholder, commanding over 50% equity dominion both pre- and post-IPO, thereby designating DT House a controlled company per Nasdaq governance canons that afford exemptions from imperatives like majority independent boards or standalone audit, compensation, or nominating committees, a configuration that, while streamlining decision velocity, amplifies apprehensions around minority shareholder safeguards, prospective conflicts of interest, and the specter of accelerated insider monetization upon lockup expiry. The prospectus meticulously enumerates an expansive roster of 20 to 30 material risk vectors, spanning operational fragilities from episodic project billing cycles and acute client concentration that could precipitate revenue troughs or amplified exposure to counterparty financial infirmities, fiscal susceptibilities, including prospective liquidity strains in nascent travel segments yet to achieve break-even, sectoral tempests such as ESG backlash, greenwashing litigations, or waning enthusiasm for sustainability amid EU-UAE regulatory flux and competitive encroachments from behemoth consultancies like Deloitte or KPMG, stewardship pitfalls encompassing managerial misconduct liabilities, non-compliant sanctions, or diluted oversight in a foreign private issuer framework with attenuated SEC disclosure obligations, issuance intrinsic perils like the absence of a pre-existing public float precipitating illiquidity or sharp price durations, incremental dilution from over-allotment mechanics, and exogenous perturbations including geopolitical frisons in the UAE-Hong Kong nexus, AED-HKD exchange rate durations impacting repatriated earnings, or cyber incursions compromising AI-dependent platforms, collectively admonishing prospective allocators to interrogate the exhaustive filing for bespoke diligence. Amid the effervescent 2025 U.S. IPO renaissance, boasting a 63% proliferation to 281 filings through October, with small-cap and tech-adjacent flotations like Park Dental or Altec Digital contemporaneously vying for bandwidth, DTDT's narrative elicits bifurcated punditry. Seeking Alpha's April 2025 sell imprimatur lambasts the ostensibly inflated ESG evangelism, stratospheric valuation premiums portending post-pop corrections, and governance frailties from entrenched insider hegemony, whereas A Invest's contemporaneous October appraisal tempers with neutral to bullish hues, accentuating the firm's UAE ESG fast lane positioning, executable upside in AI-augmented sustainable advisory, and latent accretion from burgeoning green bond issuances or COP20 tailwinds. Social media sotto voce on X, formerly Twitter, remains desultory, largely relegated to perfunctory IPO roster enumerations by bots like @IPObot_, sans substantive fervor or detractive tempests. As of November 2, 2025, without etched pricing or effectiveness imprimaturs, per the stasis in SEC Edgar, CIK 0002047713, and NASDAQ calendars, vigilant stakeholders are counseled to sentinel real-time dispatches via IPO scoop aggregators, the corporate portal at www.dthouse.com, or bespoke alerts for inflection points, all while calibrating this microcap's tantalizing alchemy of ESG AI proliferation prospects against the inexorable volatilities of an unseasoned public entity in a capriciously verdant consulting continuum.